Good afternoon. This is Brian Shannon from Alpha Trends. Today's Thursday. It's the 28th of September, and the market's not closed yet, but I got nothing going on in this market, so I'm going to knock this video out early and go do some funner things out in that nice weather outside. I've got the Nasdaq 100 on the screen right now, and I was kind of expecting a sideways action today. Yesterday on the 10-minute time frame, we had seen these moving averages started to crisscross, and I said that that probably means that we're going to undergo a period of consolidation here. And as long as we held above $40.40, I didn't really think there was any reason for any real concern here. And we came down almost to that $40.40 level, and you can see the market has had a little bit of a sell-off here today, but then recovered nicely. Looking at the 1-minute chart right now, you can see the daily VWAP, and here the VWAP was acting as resistance early on. About 1 o'clock, 1:15, the buyers came back in with a little bit of volume in here, pushed it back up above that VWAP, but it's been hanging around the pivot. Very quiet trading today, and not to be surprised. So that's kind of what we were looking for. The mid caps continue to bang away at that resistance, that level that's been resistance up near this 138 and a half, 139 level. It's still constructive action in there. Found a little bit of resistance intraday at the 200-day moving average today. I think this market, after 4 days, 3 days of good gains, probably will fall back down a little bit, maybe towards 137. Looking at a daily time frame, it looks like it'd still be healthy in there. I'm trying to pull up a 10-minute time frame right now. Let's see what happens. Maybe I can get a 30-minute time frame. Here's a 30-minute time frame. I think that this 137 level, the intersection of the 10 and 20-day moving averages down here, probably ought to be an important level of support going forward. And hopefully this market can continue to build and break out past that resistance at the 139 and a quarter level, 139.30, which is where we have that 200-day moving average. So all in all, not a bad day, but a low volume consolidation day is what it's looking like, unless something happens here in the last 25 minutes or 20 minutes, I guess, now of trading that I wasn't expecting. The semiconductors got back above that 130, or I'm sorry, the 34 and a half level that we've been watching. So that's good to see that that's becoming back as support again in here, and it's an area of contention. But the daily time frame, we've still got a good uptrend here on the daily time frame. You can see that we've got this pattern of higher highs and higher lows. That we've seen a lower high just in here the last couple of days. So we're going to continue to monitor and see if that turns into something more significant, and maybe we'll start to see the 10-day cross down through the 20-day moving average, which would indicate to me that we're probably due for a little bit more of a sideways consolidation. In which case, I think that your support might be down near $33 a share. We might even get a test down near that level, and that's where we might find further support, because that's where the 50-day moving average will come up and catch up to this market. So maybe a little bit of consolidation between the 50 and the 200-day moving average wouldn't be a horrible thing. It's obviously not going to help the bulls make money, but as far as stock picks go, there'll be some good ideas in there, so it's nothing to be concerned about. The S&P 500, the spiders, consolidated up here as well, looking like a lower volume level, so lower volume day rather. And again, there's only about 20 minutes left in the day, so I don't think much is going to happen here. But tight consolidation. We do see these moving averages crisscrossing, so it's representing indecision. If it breaks below this low, then we can say it was distribution. But for now, I'm just going to say it's a little bit of consolidation after these recent gains. And we've seen great gains this past week, and certainly this month has been a great month. And when they told us at the beginning of the month, hey, September's the worst month of the year, historical tendencies are nothing to me more than intellectual curiosities. The history rhymes; it doesn't repeat. And there's tendencies, but if you trade off those, a lot of times you're going to lose money. You might want to keep it in the background just as kind of something to consider, but it's definitely not a reason to buy or sell. So that's the S&P 500. Let's take a look at these stocks, and they all kind of sucked wind, I thought, today. There was nothing really much happened with the equities that I had mentioned, and I didn't see really much anything else either. RealNetwork wasn't able to pushed past that short-term resistance up near $11 that we were looking at, and it came down and actually stopped us out for a small loss. This is why I told you the other day, I'm in the options here. I bought some options. I've got the call options in this thing. I'm going to give it a little bit further time, but I did also have stock, which I got rid of today, so got stopped out of this one. And Teva Pharmaceuticals, we had gotten short yesterday at $33.60, and I suggested a stop at $36.78. So small loss, but more importantly, preservation of capital. We avoided this loss here. The market wasn't ready to break down, so time to move to the sidelines. Flextronics, FLEX, I had suggested considering this stock as something to purchase above $12.95, and we had that occur right here. So you should be in this stock. I had suggested originally a stop of $12.65. Right now, I think you can raise that stop. I'd say probably $12.82 if you want to give it a little bit of room. I'd probably I'm not in the stock, but I would probably put it even right up here, $12.87 or so. Why risk the extra nickel is the way I look at it. I could use that nickel for something more important than getting stopped out. But then again, that extra 5 cents might keep me in and for a big winner. So that's something you have to decide. I offer these stop areas only as suggestions, levels where you might want to consider taking it off. It's got to be up to you to decide where to get involved, or even if you want to get involved. Let's take a look at Hoku. HOKU is the next stock I had suggested looking at last night as a potential purchase candidate for today. And this stock, my computer's slow, I guess. What I suggested here was that we wanted to see the stock get back above that $4.19 high it made yesterday. So I was looking for a trade at $4.20. It never traded at $4.20, so there was no reason to get involved in this stock today. As far as HOKU goes, there was no trade, again, because it didn't trade above that $4.19 level. Let's see, my computer seems to be slowing down. Okay, but Perrigo, PRGO, was the next stock I had suggested, and Perrigo I was looking at to buy above 1708. When I say above 1708, I mean maybe 1709, 1710, 1712, but not to chase it up to $17.20. The stock gapped higher. To me, you don't chase those stocks. You wait for a pullback and then see if the stock can continue to find buying support, buying interest, that is. And on this 1 minute time frame, you can see that it came down. It fell below that daily VWAP, and it stayed below that all day. So there was no reason, in my opinion, to get involved in Perrigo. As I told you yesterday, I do own calls on this stock. I continue to hold those, and we'll see. Hopefully, maybe I get lucky in this stock. XM Satellite Radio, symbol XMSR. I had suggested that you wanted to consider buying it above $17.50. Where was it? What were my notes? Buy above $13.67. That occurred right here. I had also suggested a stop just below that daily 5-day moving average. Hey, I got stopped out of this one and took a loss too. So you know what? That's stock trading. Like I said, not much happened today. I thought today was pretty much a waste of a day as far as trading went. One of my better trades today was Chaparral, only because I had gotten in, not as I had suggested, below 30. What did I say? I said below 33.90. I'd actually gotten involved early on, right over here. It seemed like that gap was going to fail. And again, these are just suggestions. I'm not looking to front run anything. I'm just trying to get you guys thinking for yourselves. I got involved in the stock as it broke down below the VWAP, below the pivot, and held there. And then covered down, I guess down right around this area. Anyways, the stock got back up above its daily VWAP. So according to the instructions I had, 33.90, and that wasn't really a great place to sell it. You have to look at yourself and say, where has the stock come from? Would you really sell it short at 33.90 after it already dropped from 34.70? I'll tell you this, I wouldn't. That's 80 cents that it's just dropped in the first 15 minutes. To me, the risk reward just doesn't make sense. So hopefully, you didn't get involved in this one. If you did, then I had suggested a stop at $34.22, and that got hit over here. So you would have been stopped out for a loss of 32. yeah, 32 cents on Chaparral. So that's where I'm going to leave it officially, but hopefully you weren't involved in it. Then finally, I had suggested looking at FormFactor, symbol FORM, as a stock to short on weakness. The stock didn't show that weakness, and my charts aren't working, so that's going to wrap it up till the next video. Thanks for listening.